Hello there. My name is Mark Sebastian. I am the founder of Option Pit, and this is using the B.E.T.S system to develop trade ideas and really go through trade ideas. I want to remind you that this is for education purposes only, isn't an investment, legal, or tax advice. You should absolutely do your research before you trade stocks or options or anything like that. And with that, let's talk about who I am. My name is Mark. I am the founder of Option Pit, and I am a trader. I trade options. But obviously, I've traded stocks, I've traded futures, kind of the whole 9 yards. I was a floor trader on the American Stock Exchange in New York and the CBOE for 10 years. Since then, I started Option Pit and my hedge fund, Carmen Line Capital. We are at Option Pit, we work with retail traders, guiding them on how to make better trading decisions and how to become really good retail traders. We develop trade ideas and educate our investors and traders on how to trade and manage those ideas. So think of it as guided trading. We are our students are the apprentices. We are the masters. It's that kind of relationship. We want you guys to become master carpenters, but we'll show you how to do it in the meantime. And today, what are we going to talk about? We're going to talk about what is B.E.T.S. I'm going to do a breakdown of each word in my acronym. I'm going to talk about how to implement this trading approach, and then I'll do a quick breakdown of B.E.T.S in a stock. So the questions of my nightmares. You all see those on the sitcom when someone's having that nightmare, and it goes to like a cut scene where there's all sorts of horrible things happening. Well, imagine that for me, and what I'm hearing is, should I buy this stock? Mark, what do you think of stock XYZ? I want to buy a call in this stock. What should I buy? Mark, what stock do you like right now? And what type of trade would you execute? Mark. What should I do? What should I do? What should I do? I first tell people, one, I'm not an advisor, so I can't really tell you what to do. But then I tell people, I start asking people questions. And usually they get to their own answer. And that's really what B.E.T.S is about. B.E.T.S is about guiding you to your own answer. And it's what we do at Option Pit, develop our own answers to our investment questions. So I developed B.E.T.S as an acronym to walk people through whether or not they have a stupid idea. Here's a hint. Most of the time, people have stupid ideas. If you are asking yourself, is this a bad idea? You usually know the answer to the question. So, but by following this system, you can take an idea that you have and develop it into a trade or realize that it's a bad idea. So what does B.E.T.S stand for? So B.E.T.S stands for background, energy, time, and strategy. B.E.T.S. Background, energy, time, and strategy. So let's talk about what each piece is. And background is the first piece. And what that really is short for is background story. Every investment or trade should have a background story, a reason, a tale. Right? When you watch an analyst on television, when you talk to a CFO or a CEO, when you talk to someone who's starting a business, when you talk to someone who's interested in investing in a startup, when you talk to someone who is passionate about a religion, a sports team, their wives, their children, what they're really passionate about is not the symbol or the name, it's the story behind them. Right? I'm passionate about my children. Why am I passionate about my children? Well, one, they're my offspring. But really, I'm not going to tell you, well, when people are asking me, well, why do you love your son, Mark? I don't just say, well, he's my son. I give a whole host of reasons why he's a great kid. When people ask my wife, why are you married to Mark? She doesn't just say, well, he's my husband. She gives a whole host of reasons why she continues to tolerate me. And that applies to everything. So really, why a stock goes up is as much a mental game as it is anything scientific. Technical analysis is a story based in a chart. Fundamental analysis is a story based in, price earnings, things like that. And the startup story, the future investments, because the growth names, the Beyond Meats, the Teslas, the ones where there is no fundamental or technical, the story is the future story. So what the story really is what has happened in the past, and why is what has happened in the past going to be the same or different than what will happen in the future. What has happened in the past is either going to be the same, in which case you're talking about an income name, or what has happened in the past will be different, in which case you're talking about a growth name, a name that can have momentum to it, which we'll get to. The story is the key. And it may sound simple, but a lot of people don't think about it that way. And so when you get excited about a name, the way to avoid FOMO, which is the fear of missing out, is to avoid not ignoring the story and building a story, building a narrative to a name. So get that background right. So what does the background answer? It answers that the stock will go up. It answers the stock will go down. It answers if the stock will not go down. It answers if the stock will not go up. So it is that simple. If you don't have a good story, if you can't make an elevator pitch for a name, it's not a trade, it's not an investment. And the amount of times I see people just buy a stock because it's in the news is problematic. So now the next piece of bets is energy. And energy is another word for volatility, and that is how much movement does a stock have? Is the stock whipping about? Does the stock have momentum? Right? Movement is whippiness, it's momentum. Does the stock have chop? Right? Chop is day to day, whippiness is intraday. Is the stock on a slow climb higher or a slow death lower? Could the stock gap? And by gap, I mean make a move and then stop moving again, right? Momentum is when a stock goes from 50 to 60 over several days. A gap is when stock goes from 50 to 60 overnight. Whippiness is a stock moving in a general direction, but whipping up and down around it. Chop is when a stock goes nowhere, but moves up and down. Whippiness and chop, momentum and the slow climb, and gaps. Those are all the energies that stocks have. So the question is, how does that affect your trade? Well, If a stock gaps, well, then you're really talking about events risk and events happening. Stocks don't typically gap without a reason. That gets back to your story. Momentum is also often associated with a story. That can be, momentum is associated with a story that has traction. Right? Whippiness is created from dueling narratives. Right? Whippiness is created by dueling narratives. Stocks going up, stocks going down. I can think of a lot of stocks that have had dueling narratives. Recently, the last year, I would say Tesla has been that dueling narrative. Right? A name like Beyond Meat has a big underlying narrative, which is its numbers, right? It's got the fundamental narrative, but then you have names like Beyond Meat where it has a story narrative that is eclipsing the fundamental narrative, the fundamental story. The story, McDonald's is going to do Beyond Meat. Kentucky Fried Chicken is going to do Beyond Meat. Story 2, Beyond Meat doesn't make money. Well, one is absolutely trumping the other. Right? Slow climbs happen with a story based in fundamentals. Momentum usually happens with a story based in a feeling narrative or a change in future. Right? A hard momentum trade is because the future is changing. A slow climb is because the future is staying the same. Gaps, you could say, are when we have a change in the future that is not going to be exponential. The energy essentially answers whether the stock is volatile and if the stock has momentum in its movement. Stocks with low energy may make great investments, but could be bad trades. They could also be option selling candidates. You know, it's funny. When President Trump says, you know, he's a low energy candidate, I think about selling puts. Right? I don't actually think about politics. I think about, I should find something to sell a put in. Speaking of low energy. So part of the reason why I continue to not watch business news, because I don't want to have to think about low energy candidates, because I can find stocks to sell puts in on my own. Stocks with high energy tend to be short dated trades. And energy can be up or down. You could have a lot of whippiness, a lot of chop, a lot of gaps, a lot of momentum, or you can have low energy in those. So let me show you some high and low energy. All right. This is ULTA Cosmetic. The white line represents how much it's moved as a trailing 10 days. The blue line is the trailing 20 days. What does this chart tell me about ULTA? What it tells me is that it has gaps, right? Here's a gap. Here's a gap. Here's a gap. Small gap here. The rest of the time, the energy is pretty consistent. So what you'll notice is earnings cause ULTA to make crazy moves. Earnings really matter. Earnings are the story with ULTA. The rest of the time, the energy is pretty darn consistent. See that consistent energy? Now here's another name. This is ROKU. ROKU moves on earnings, but what else do you know? Is this consistent energy? It's one where it gaps. It's one where it moves around a lot or a little. I mean, the move here to down here to back up here to down here to back up here tells me that ROKU is a high energy name and a name where I can find trades. I can find some short dated trades. I've had some trades in ROKU that have been extremely profitable. It's one where if I have a story, all right, I know what kind of energy the underlying is going to have to it. ROKU has had two major changes in its story arc in the last year. It's had a really negative change in story arc right here. And then this has been a huge positive change in story arc. Next up, we have time. And that is like, what is the horizon of the trade? What is my holding period? That's going to help me determine what I'm actually trying to accomplish. What is the trade going to develop into? Is it going to move in a week, in a month, in a year? When do I want to set up my trade? Do I want to invest now? Do I want to invest later? Can I wait for it to start moving, or do I need it to get out in front of it? What is the duration of my trade? So when do I want to put on my trade? And what is going to be the duration of my trade? Really important. So things like, when will I enter? When will I exit? What are my profit targets? All come from time. If the profit target doesn't hit by a date, what do I do? When do I give up? All the time component of the trade. Picking a time component. So this is going to be the first time you've seen me even discuss options this entire webinar. Why? These green numbers represent implied volatility. The higher the number, the more movement they're looking for. So even if you don't ever want to trade options, this piece of information is valuable to you because it can tell me when earnings are. Earnings for this stock, which is ROKU, are going to be the week of November 8th. I don't even have to look it up. Easy as pie. All right. What do I do? Where do I place my trade if I think it's going to move in 2019? What about in 2020? Where's the best value there? What kind of option trade should I set up? When should I buy my stock? Right? I think, do I want to be long before or after this November 8th week? Time is so critical. All right, now the final letter is strategy. So background, energy, time, and strategy. So really, I'm using the bet in B.E.T.S to then develop the S, the strategy. Do I want to buy the stock? Do I want to go long a call? Do I want to sell a put or a put on a credit spread? Or put on a credit spread? You know, if I'm bullish, if I'm bearish, do I want to sell the stock, buy a put, sell a call, put on a credit spread, put on a debit spread? What about something complex like a butterfly or a calendar? All of these are going to be are developed in B.E.T. And then S is that application. So B, do I want to go long or short? E, do I want to go long or short options? All right. Now I know if I want to sell a put or buy a call. If I think a stock has a lot of energy to it, do I want to sell puts or buy calls? I want to buy calls. If I think a stock is low energy, all right, I want to sell a put. As you develop into a better trader and as you start to learn options, you ask yourself, do I want to spread? What is my time period? Now I know when to put on my trade, all right, or where I'm expecting energy to be, right? Going back, maybe I want to own energy if I'm going to trade options. Maybe I want to own energy the week of November 8th and sell energy on November 1st or in January. So then finally the S is build an actual trade using the above. And then I use price goals to build a spread if I want to use that as my spread. So if I think the move is going to be strong, I buy options. If I think the move is going to be slow, I sell. If I have a target, I spread. If I think there's a spot where it stops. All right. Spreading is also where implied volatility comes into play. That is where implied volatility is coming into play. I use implied volatility to help me decide whether I want to buy or sell options. And that is determined by my relative cost. Are options cheap relative to the energy? Right? Implied volatility is the market's best guess at how much energy a stock is going to have. And then you can look at how much energy a stock currently has. Then I look at something like skew to help me with strike selection. And I use term structure to help me piece together where I'm going to place my trade. So with that, let's walk through a strategy. All right, and I asked everybody for some names of stocks to look at prior to the start, and we decided on Adobe. So Adobe, I want you to look here. We start with the chart. Now, Leisha that works with me is a much better chart person I am. But I can tell you what I see. I see a stock that had a ton of energy on the way up. And has not had very much energy on the way down. It's been more of a slow crawl lower than a, so here's that initial push of energy lower. And then here is what amounts to a 3-month continuum of low energy in Adobe. And I can further prove that I'm going to turn off my IV. By looking at, look at this gray line right here. When I'm on right here, look how kind of flat that is. And look at long-term volatility, the stock at both purple and kind of this pink. And more importantly, probably most important, is when I see this type of pattern, the white line is sinking. All right, you can see we had energy up to here, up at 40%, go all the way down to about 15. Prior to earnings and on earnings, we got up to about 30. We're currently on at about 23. We're going to see movement drop to as low as 20. Probably lower. I think we're going to see movement drop into the teens in 10-day movement, 10-day volatility. So to me, I'm seeing a name that I think is going to go lower and has low energy. And now I'm going to use that time component. They're going to have earnings, looks like in mid-November, mid to late November. And I think it's going to sell off all the way into earnings. So I'm going to use this November 1st contract to develop my trade so that I'm not dealing with any of the earnings garbage. I don't like dealing with earnings, right? That's when you run into gaps. That's when you run into problems. And I'm going to sell a call credit spread in a name like Adobe. I'm going to sell, looking at curvature here, the 285s are the cheapest option on the board. I'm not going to teach you why now. That is in of itself a 3-hour webinar. And I'm going to sell man, I really like these 277.5s. I'm going to click about $1.25 selling the 277.5, 285 call spread. All right, the only thing I don't have for this, what did I skip? I did the energy, I did the time, I did the strategy. What step did I skip? I skipped the story. Why did I skip the story? Because at the beginning of this webinar, I asked everybody for a stock and what they thought, a stock and their bias. And so my story is investors that I trust, you guys, thought Adobe was going to go down. Is that a good story? No, that is a terrible story. Your story should never be somebody told me to do this. All right. So let me talk to you about what my stories look like when I develop them. When I develop a story, I need to log in. Thought I was logged in already, everybody. Remember me. What my background looks like. So when I look at when I do a story, here's what it looks like. And I'll just show you Alibaba. I do 2 pages on the overall market. I do a discussion on trade trends, developing a story. In this case, the story I came up with, Alibaba. My theme, you'll see I had a theme. And then I dig into the energy and time. And then I finally end with a strategy. And you're going to get a 6 to 8 page document every Tuesday, my Tuesday trade, with a trade idea that we think is going to pay out well. In this case, the trade did well over 100%. This is our brand new silver membership we just launched. All right. We do a write-up. Then the next day, we finally pick our prices. We pick our prices. In a live chat room where I spend about 10 to 15 minutes recording a video discussing why I like a specific trade. I take questions and we set our prices. We track the trade. You get a text message saying, here is the trade that we executed and here is our pricing. You also get a text message when we are closing the trade. So you get a report discussing the market and a great trade idea every week. You get a text message saying, here's the pricing that we are in. And here's our closing price. And you'll get a text when we close. You get a weekly video where I explain exactly why I'm doing it in detail, so that if you have confusion between my report and kind of what, if that confuses you, I can explain it then. You get the Option Pit Markets Show every Friday. Andrew and I, Andrew who works for me, and do a 45-minute show where we go through trade ideas presented by you guys. We talk about markets. We develop a trade idea that we like, and we do a little video that we put out that says, hey, here's kind of our best ideas. You get hours and hours of access to educational videos we put out, including our silver class. That is a great intro. And then we're going to begin next month our monthly classroom, where we dig into a topic, essentially reteaching the classes in our store or a new class. So we're going to be teaching a 2-hour classroom class every month starting next week. This membership is only $97 a month. Go to optionpit.com/silver member to register. And if you want to get in, our Tuesday trade from this week is still there. So if you want to get in, I think that is the perfect opportunity. And if you register as a gift, I will send you like a little, I'll send you a little something as a present if you register for the membership. It's the best thing of everything. So go to optionpit.com/silver member to register and to join our brand new silver membership. You're absolutely missing out if you're not doing it. It is the most detailed, in-depth, educational, and actionable thing out there, easy to understand, with text messages guiding you through the trades. All right, and we have a full money back guarantee. If you do, if you follow what we do, on your own time, in your own way, and you don't make money, I will give you your money back. Follow the way I'm trading, and you don't make money, I will refund your silver membership. Any questions, comments, or thoughts? If you want to email me directly, my email is mark@optionpit.com, or you can call our number 888-TRADE-01.